All right. We're getting started here. It's our first live show. It's March 11th, 2026. This is episode 37 of the Freedom Finances Show. I'm not sure if anyone's going to watch live. If you are, thank you. If not, this is just going to be our normal Freedom Finances Show. We haven't had a lot of shows lately, and that's mostly because we've had some weird things going on with everyone's schedule. And I just wanted to make sure that everyone had a chance to get back on the finance news, figure out what's going on with life. All right, today we're going to talk about inflation. We're going to talk about Iran. We're going to talk about gas, oil prices, a little bit of the news in the economy. There's a lot going on. I don't want anyone to be too worried, so I want to break it all down. All right, so let's just get started with a little bit of news. There's a new inflation report that came out today. March or February was up 0.3 since January was up 0.2, so not too bad. We don't want to continue that trend of being over 0.2, but we're going to get into that a little bit more. Gas prices are huge, oil is huge, Iran, Israel, the US, huge. Let's get started with something a little bit easier to digest, and that is going to be mortgages. So mortgages have been wild. I should say mortgage rates have been wild over the last, 3 years. And right now we're down to 6% for a 30-year mortgage. Still somewhat high, at least as the trend has been over the last 10 years or so. But this is the lowest rate that we've had since September of 2022. Obviously, 2022, 21, 2023, all terrible inflation years, just a rough economy overall for the United States. And they boosted up the interest rates to slow spending. We've talked about this a million times, but what we're looking at right now is interest rates just really slowly going down. Mortgage rates are following very, very, very slowly. And this is frustrating for a lot of people who want to sell their house or get into the house. And let me explain. We'll start with the buyers. So obviously a 6% interest rate, it's really not the end of the world. And Nick has brought this up several times. As interest rates go up, your mortgage goes up. But in the past, we've seen 7-8% interest rates for a 30-year mortgage, and we kind of got used to lower 2, 3, 4% interest rates. I guess it was never quite as low as 2. But we're the last 3-4 years, interest rates have gone up, right? And that has slowed the market, the housing market, way, way down. If you remember during COVID 2021, everyone was buying a house. Everyone was buying a house. Interest rates were really low, and it just caused inflation to go up. So obviously, as demand goes up, interest or rates or prices should go up, I should say. So that's what we've had, is rates just skyrocketing to slow down inflation. Prices went up because demand went up. And right now what we're seeing is the economy's been okay. 2025 was a pretty decent year overall. We saw gas prices settle. We saw a lot of things in our economy settle. Obviously, there's a lot of stuff going on with tariffs, but overall, mortgage rates have just been really slow. So if you're a buyer, it's getting a little bit better. If you're a seller, someone like me, I am a seller, I'm trying to sell my house. I want more people buying, right? I want interest rates low. So one, when I buy my house after I sell this house, I get a low mortgage, but I want it low so that way a lot of people want to buy my house, right? That means I'll sell my house sooner. Maybe I'll get some competitive bids. But I, as a seller and a buyer, I want interest rates low. So overall, 6.0 for a 30-year mortgage, not too bad. I think we'll see some better prices in the future going forward. All right, next, let's talk about inflation, the new inflation report. So this is the new inflation report from the U.S. Bureau of Labor Statistics. The consumer price index for all urban consumers was increased to a 0.3 percentage on a seasonally adjusted basis in February. In January, we saw a 0.2% interest rate. So that's important because in October and November, we had shutdowns, so we didn't really know what was going on. Before that, we had a 0.3%. We had a 0.3% in August. December, 0.3. January, 0.2. February, 0.3. These numbers aren't bad, but let's do some math here. The goal is around 2%, right? There's 12 months in the year. So if you have a 0.3, these are cumulative numbers. It's really important to understand that. The goal is a 2% increase in inflation over a 12-year period. So that means you have to go between 1 and, or you have to go between 0.1 and 0.2 each month for inflation. We're at 0.2 in January, 0.3 this month. So what does that mean? Overall, essentially what that means is we're on pace. So let's say January and February, let's do a little math. We're on pace for 0.2 plus 0.3. And I know this is basic math divided by 2 times 12. We're on pace for a 3% inflation rate for a 12-month period for the year of 2026. That's not good. It's not horrible, but it's not good. It's a whole percentage point above goal, or 50% over goal of 2%. Now, let's break that down more, because breaking it down and understanding what's going on is as important as the numbers themselves. So, what happened in December and January? Gas prices plummeted. They went down, they went down, they went down. And you can see fuel oil prices, December minus 0.8%, and in January minus 0.57%. That's month to month. It dropped 5.7% from December to January. So it kept going down. In February, oil was up 11.1 points in inflation. That's almost a 17-point swing month to month. Now, we're going to get into oil and Iran and all that and really break down what's going on. But this is a huge part. Inflation is 6.2%, 12-month unadjusted for oil alone. Now, gasoline is minus 5.6 for the 12 months, but it took a swing of negative 0.3 to 2.8. So that's a 4% swing. Again, huge adjustment. We're seeing the pendulum swing all the way over from left to right. And what you're seeing here is just a huge impact on inflation rate. So let's ignore that for now. How would inflation look? Because we all know that food and oil is the most volatile when it comes to inflation. So you have to look at other things, all items, less food and energy. We had a 0.2% inflation rate in February for all foods, all items, food, less energy. Okay, not bad. 0.2% overall. Commodities were 0.1%. Used cars and used trucks minus 0.4%. Apparel 1.3%. Medical care 0. New vehicles 0. Services, less energy services 0.3%. So services were up a little bit. Medical care services 0.6%. So what does this mean? And again, we're going to get into oil and everything. So I'm not going to talk about oil right now. So what should you think? Here's what I say. Here's what I think you should think. Let's see. Okay. So if I'm you, if I'm me, and I'm a regular consumer, right? I'm thinking, okay, inflation is at 2.4%. When this report comes out next month for March, we're going to see it go up even more because gasoline skyrocketed in March specifically. It went up in February, but a lot of it went up in March. I'm not too worried. Now, I'm not trying to downplay some of the issues, but I'm really not too worried about this. The reason why is because when it comes to food, when it comes to energy, those are very volatile. We know what's going on with Iran. We're going to talk about it in a second. It's not that big of a deal. Now, if it keeps happening, 0.3, maybe we see 0.4, 0.3, 0.5, then we've got some issues. But our economy is relatively stable. Some things going on with tariffs in the Supreme Court have kind of made things confusing for us as consumers, for the government. We don't know, but I feel somewhat cautiously optimistic. There's a jobs report that came out. Not good news. It's not looking good. And I think that this could be a reason. Hey, what's up? I see you in the chat there. Thanks for joining. But anyways, I wouldn't be too worried about inflation right now. It's 0.3 for the month, up from 0.2. No big deal. We're at 2.4%. Don't worry about it. So let's get into the stock market a little bit. I don't want to get into oil. I promise we'll get into oil in a little bit. Iran, all that. So let's talk about the stock market. The S&P 500 right now, as I speak, it's at 6,760. And let's talk about the Dow Jones. Right now, it's around 47,000. So 47,342. And if you look at the stock market, those are good numbers, right? I don't know if you guys remember a year ago. Let's see, a year ago, it got as low as 4,900. So year to date, it's up 21%. Or sorry, over the last year, it's up 21%. Year to date, the S&P 500 is down 1.21%. So I want you to think about this. The stock market has been great. You know, who do we see? Pam Bondi, when she was getting crushed on the Epstein thing, she's like, the stock market's at all-time highs. Well, right now, the stock market kind of sucks. And we can talk about why. I think it has a little bit to do with jobs and most to do with Iran and uncertainty there. So let's talk about that, because the stock market is a reflection of the saving of wealth and what people think is going to happen in the future for your money. Investments in companies. Now, if you look at the S&P 500, it was up to $7,000. What is that? Just like a couple months ago, right? It hit a high in February of 7,000, right? So great number. Really good number, 7,000. Now it's down. Listen, you can almost directly talk about the conflict in Iran. When did the Iran conflict start? Let's see. The date, February 2020, February 28th. And let's see what happened on February 25th. The stock market was at almost $7,000, $69.46. And what happened in March? It keeps dropping, right? So what we're looking at is essentially 250 point drop just from this conflict in Iran. I don't know if this is going to be a war. We're not going to talk more about Iran at the moment, but what you should be thinking about when it comes to the stock market is two things. One, don't freak out. You can either put some more money into the stock market since prices are down, or you can feel, I don't know, maybe the stock market's going to keep going down because of the conflict in Iran. Maybe it'll keep going down. What's up? I see you've joined. Thanks for watching and joining live. But maybe the conflict will keep going down or keep going on, and the stock market will keep going down. If that happens, then I think we could see the stock market going down because the conflict in Iran is going on too long. I don't know. So you have two options. Add a little extra money because the conflict in Iran is causing the stock market to go down, or hold pat, right? Because maybe you think the stock market's going to keep going down. We got a couple people for joining. Thanks for watching. We're talking about the conflict in Iran. We're going to really get into it, but right now we're talking about the stock market. So let's move on from the stock market. Let's get into gas prices. This is what really matters, is gas prices. I want you to think about this. Let's see. At the end of 2026, people were seeing gas prices under $2 per gallon at the pumps. That's not just the price that your local gas station was paying, but some people, myself included, now I go to Sam's Club, so I pay a discounted rate. I think we paid as low as 179 at one point. I can't remember the last time I paid 179 for a gallon of gas. I remember being a kid in high school and seeing $3 in gas and worrying about my parents and thinking, what are they going to do? Like, how are they going to pay for their gas? Anyways, to see $1.79 for a gallon of gas when a few years ago I was paying $5 a gallon, it was a miracle, right? Like, regardless of your politics, you have to be like, damn, maybe Trump is getting it done. Well, guess what? Now gas prices have doubled quickly, like that. I just saw a quote that Donald Trump said, like, gas prices skyrocket, but they slow like a feather falling. Okay, whatever. Thanks for joining. I see more people joining. But yeah, gas prices, they've skyrocketed. Like they're only going up and up and up. $2.76 is the average. Again, this is the average according to Trading Economics. This is the average that your local gas station pays for the gas. So you're probably seeing much higher gas prices than 278. So gasoline is manufactured through oil. It's a product of oil. So let's get into oil prices. Oil prices have been pretty good the last year, just like this. So let's say in January, we're paying about $60 to $65 for a barrel of oil. That's how oil is priced through a barrel. Think of it like a stock. $65 for a barrel of oil, for crude oil. And it went as low, I think, as $55 in December. And it skyrocketed to 95 in just a few days ago. Now, this is where we get into Iran and everything going on in Iran. So there's a few major oil reserves all around the world. The US has a lot of oil. There's a lot of oil in the Middle East between Iraq, Kuwait, Iran, the Strait of Hormuz. There's some oil in Venezuela. And, obviously the US has the Gulf. We have Alaskan oil. We have oil reserves all over the world. But a lot of it, I don't remember the exact amount. Maybe it's like 20% comes from the Strait of Hormuz, which Iran has a big say on the Strait of Hormuz. So you have to think of it this way. Oil is something that is a commodity where the higher the demand, the higher the price will go up. Now, the price will eventually go down. It's not something where in 30 years from now, it'll just keep slowly going up and up and up. Like some prices just always go up. It doesn't matter. But oil is something that will go up and down based on demand and based on current events and based on supply. But here's the thing. The supply chains have essentially been fine. There have been no issues with supply chains except for the last few days when Iraq started slowing their supply of oil. The UAE started slowing supply of oil. What's up? I see you've joined. Thanks. We're talking about Iran and crude oil and the prices of gas. So essentially, you see oil prices going up because of fear. People have been buying more and more. Traders have been buying more oil. Barrels of oil have gone up. They skyrocketed. Gas has gone up. They've skyrocketed. So this is what we're going to get into and how we should understand this. Let's go over a couple articles. I'm going to read from Yahoo Finance because there have been some talks of releasing more oil. So oil futures ticked up into the high 80s. This is from Jake Conley of the Business News from Yahoo Finance. Oil futures ticked up into the high 80s per barrel on Wednesday after the group of 7 nations agreed to release a combined 400 million barrels from the Strategic Petroleum Reserve, the bloc's largest release on record. This is because there's been some violence in the Strait of Hormuz, which we'll get into in a little bit. Thanks for joining. All right. Futures on the international benchmark. Brent crude rose roughly 3.7% Wednesday, trading to around 88.4 per barrel. Again, we were trading at $55 per barrel for oil just a month ago, just a couple months ago. Prices sank as the news released. So if you look at oil prices, you saw on March 9th, they skyrocketed to 93 per barrel and they dropped to 84 like last night. Right now they're at 87. Here's the thing. This is going to impact your wallet right now. What you should expect is to pay a lot for gas for a while. If they release a lot of oil and this conflict in Iran stops, maybe you'll be okay. I don't know. But for now, you should expect to pay a lot for gas. Pay a lot at the pump. Expect, depending on where you are, $3, $4, $5, $6 for gas. That sucks. That's not good. That's not good for the economy. It's not good for the consumer. And I do think that's something that our government has to think about, right? Obviously, there's been a lot of people who have been upset about the war in Iran. Some people who think the United States shouldn't be doing bidding for Israel. There have been some people who've been fans of the war in Iran and saying Iran has been killing Americans. Here's my thoughts. I have this little piece right here that's driving me nuts. Here's my thoughts. What does the United States get out of this, right? What does the consumer, what do you and I get out of this conflict in Iran? Now, if the answer is just they kill less Americans and this is a small price to pay, and in the end, the future of the United States is safer, okay, that's difficult to think about because we're paying a lot of money because of this war in Iran. Thanks for joining. What's up? It's good to see you. But what else? What else is going to happen? I really want to know, how is this war in Iran going to help the American consumer? How is it going to help us? That's what I want to know. If in the end we get a bunch of oil from this, maybe that's a good thing, right? If our gas prices go down to $2 or less a gallon, but right now we're paying $3, $4, $5 per gallon, it's ridiculous. And that's just my thoughts. I don't know what's going to happen with this war in Iran. Let's break it down a little bit more. I want to talk about I want to talk about the war in Iran and the Strait of Hormuz. So there's been a lot going on with the bombing in the Strait of Hormuz. So this is a major supply chain for oil. Essentially, oil goes through this, oil tankers go through this. So if it gets locked up, if there's a war going on in that area, that means oil isn't moving. Literally, there's oil stuck on ships or cargo ships, or they're not able to trade them. It's crazy to think, but this oil's got to get from one place to another somehow, right? Which means whatever it is, 20% of our oil is all locked up. Okay, so there have been some news. I'm going to pull up this information right here from the Epoch Times. This is 3 ships hit by projectiles in the Strait of Hormuz as Iran attacks escalate. All right, this is from Tom Ozemic. 3 commercial vessels were struck by projectiles in and out of the Strait of Hormuz overnight as Iran wrapped up regional attacks. UK maritime officials said on March 11th, with one of the strikes sparking a fire that forced most of the crews to abandon ship. UK Maritime Trade Operations, which monitors shipping security in the regions, issued multiple alerts describing the incidents and advising vessels to transit with caution while investigations continue. In one incident early on March 11th, UKMTO stated that it received a report from the master of a bulk carrier located 50 nautical miles northwest of Dubai, UAE, noting that the vessel had been hit by an unknown projectile. Quote, there's no report of any environmental impact. The crew are reported safe and well. All right, I'm not going to keep reading, but I think what it's important to understand is there's a lot going on in the Strait of Hormuz. And if it's not a safe place to move oil, we're essentially eliminating 20% of our oil reserves. What's up? Thanks for joining. I see you've joined. We're just talking about Iran and the cost of oil, everything going on. It essentially, if this conflict stays and they can't get the Strait of Hormuz cleaned up, they can't get Iran cleaned up, then oil is just going to stay in the 80s, the 90s, hopefully not more than that. And you're going to pay minimum $3.50 per gallon. It sucks. Now, how is this going to look in 6 months from now? Maybe it will come back and it'll be like, Bradley, who gives a crap? It all worked out fine. I hope that's what happens. I hope that's what happens. Who knows? I don't know. Hopefully we'll be paying $1.50 per gallon. I don't know. We better get something out of this as an American consumer, because right now it's eating at the stock market. It's potentially hurting jobs. It's hurting gas. It's hurting inflation. The inflation report, 2.4% inflation over 12 months. Not bad. It's not perfect, but it's really not bad. Like, it's just barely above goal. I'll take it, right? Awesome. But what's going to happen next month? It's not going to be 2.4% because gas is skyrocketing. I promise it's going to be 2.5, 2.6 or more. Now, if I'm wrong, awesome. That's great. But gas prices are so freaking high right now, it's going to keep going up. So that's my take on it all. The last thing is, like, what do you do with all this going on with the conflict? First, I do think I got a little dramatic at times. We're okay. I don't think this is officially a major war. A few people have died from US soldiers, which is obviously tragic, and I think we need to respect and thank those people. A few hundred people have been injured, but this isn't a major conflict. So it is a major conflict, I should say. It's not a major war yet. I don't know what makes it a war, but we'll see. I think right now what we have to think is, let's just stay calm, stay back, watch things, pay your gas, try not to spend too much money. You have one of two options. Pay off your debt during this time, which you should always be doing, but put a lot of focus on paying off your debt so that way you can multiply your money in the future. You can also put extra money into the stock market, since it's a little bit lower than it was a few months ago. But the question is, will it keep going down? I think that's actually a really important question. Is the stock market going to go lower than 6,700 for the S&P? In which you need to start throwing more money in, right? It's going to eventually hit 67, 68, 69, 7,000 and above. So you're not going to lose much money. You might lose money in the short term. So the question is, what do you prioritize? My recommendation, as always with Freedom Finances, is get out of that bad debt. Credit card debt, pay it off ASAP, no matter what, okay? That's the number one most important thing. And then if you have extra money, maybe throw some of it into a bond, or, throw it into the stock market, throw something like VOO, SPY, FZ I think that's something. Let me put that in chat. VOO, SP Rocks, FZ I should say. Those are some good things that you can look at for investments right now. Again, they might go down a little bit. They might come up a little bit. Who knows? Eventually, they're going to come up a lot. So do you want to take a little bit of a risk? You're technically buying at a discount because it was up to 7,000. I don't know how long this war in Iran is going to last. If 2027 comes along and we're still talking about it, things have not gone well. And I don't think the economy will look good. And I don't think your bank account will look good. if it's, you know, end of summer and we're like, hey, remember that war in Iran? I think we'll be okay by next year. So that's all I have. Thanks so much for watching. My name's Bradley Valentine. This is the Freedom Finances Show, episode 37. I'm going to go live more. We're going to have more shows going forward, but it's just time to talk into it, to get back into the world. And thanks so much for watching. Adios.